You know, I think that every company on earth is sitting on a balance sheet that's normally cash and credit. So with a few exceptions, everybody's holding some kind of US dollar or euro or the local fiat currency. And if they want an alternative to that, they're holding low risk debt, sovereign debt. And if they're really risky, they would be holding some other debt. But a lot of times it's sovereign debt. And so that's cash and credit. And the cash and credit are crumbling, right? They've always been crumbling, but now they're crumbling at a faster rate. In good times, they're crumbling at 7% a year. And in bad times, they're crumbling at 10 or 15 or 20% a year. And in horrific times, like if you're in Venezuela, Argentina, Lebanon, it's crumbling at 60 to 80% a year. And that's hyperinflation. So a year ago, we were staring at a balance sheet with $500 million of cash and credit, and it looked like it was almost certainly going to crumble at a rate of 15% a year for 4 years. And that drove us to discover Bitcoin. And then a light bulb went off, and I realized that we could swap out the entire amount for something better. And there are a lot of ways to view Bitcoin, right? You can view Bitcoin as digital property, digital money, or digital energy, and if you characterize it as digital property, it's like I bought a $500 billion block of property in cyberspace. And if you characterize it as digital money, I basically bought $500 million worth of a currency that nobody can print any more of. And if you characterize this digital energy, what we did is took analog energy and we digitized it. And, if you had a megawatt of power and you sold that megawatt of power commercially at 11 cents a kilowatt hour, you'd have about $1 million worth of revenue. And if you took that megawatt of power and you mine Bitcoin with an S19 miner, today you'd have about $4 million of Bitcoin. But the difference is if I'm holding a megawatt of power as electrical energy, electricity, I'm going to lose 2%. How do you put it in a battery? Find me a battery that holds a megawatt of power. First of all, if you found one, it's got a 2% bleed rate a month or more. So you're going to lose 24% of your power in a year. The half-life of the power is at best 3 years. And if you move it, you have to move it on a power line. You can't move it more than 500 miles. You lose 6% of your energy at the end of the line every time you move it. So your transaction fee is high if you move it, and your inflation rate is high if you hold it. And on the other hand, if you convert it to digital energy, you could hold it on the network forever for no power loss. Someone just moved $2 billion of Bitcoin at 78 cents, right? You guys saw that? So you could move it from here to Tokyo across a satellite connection for 78 cents. So again, no cost to move it, no cost to hold it, no constraints on the storing of it. The half-life is forever. So when I look at Bitcoin, I think, let's just convert the balance sheet from analog money to digital money, or from something that's a depreciating asset to an appreciating asset. We did that, and we took the first bite at the apple August of last year, and then we did a Dutch auction to get permission, in essence, from our shareholders to reinvest the rest. And by the time we finished that, we had, in essence, we had bought back about $70 million worth of stock, 60 or 70, I forget. And we had invested $425 million in Bitcoin. Obviously, Bitcoin did what it's supposed to do, which is appreciated. And from that point, our stock started appreciating, Bitcoin started appreciating, and we had the ability to raise more money through business operations. We generated cash flow. We sold equity. We sold debt. We sold convertible debt. And we continue to build to our Bitcoin position because what we realized is we can and we should have two strategies. One strategy is run the software business. And the other strategy is run a property business. We're in essence running a cyber development company or a cyber REIT, if you want. Like if I tell you there's 21 million blocks in cyberspace and each one's a Bitcoin, and the world's going to consist of 21 million blocks, and you showed up there 200 years before everybody else showed up, you would think, I'm just going to start buying city blocks in cyberspace as fast as I can. So we bought ourselves some, and then we realized that there are more to be bought. And so we kept buying. So where do we end up with today? Or where are we today? Let's contrast this. A year ago, we were a $500 million business growing 0% a year with 500 million in a balance sheet and crumbling cash and credit. That's where we were a year ago. And the company was valued at about $1 billion. Maybe 1 times revenue for the enterprise software business. And then the cash and credit was worth 1. That's where we were a year ago. Today, we're a $500 million software business growing about 10% a year. So we got some growth out of it. We got more notoriety, better for employee morale, better for product awareness. So we got a bit of a boost. And we're a $5 billion property business, Bitcoin business, growing 100% a year or more. So we've got a high growth business, digital energy or digital property, and we've got a low growth business, enterprise software, and they're both linked. And they both benefit from each other in different ways. So why did we do it? Well, first we did it defensively. And then we were opportunistic, right? Stage 1 is defensive. I don't want to lose my money. Stage 2 is opportunistic. I did it because I could. Stage 3 is strategic. This is a pretty good idea to buy up all of Cyber Manhattan before everybody else moves here. And if Bitcoin is appreciating 100% a year, and if I can borrow money at 5% or 1% or 6%, then my arbitrage is going to be 100%, 95%, whatever the number is, right? We can debate. I think Bitcoin went up 130% on average for a decade, and it's up faster this year. So you plug in the number you think it'll be, but let's say we think it's going to go up 110% for the near future. If I can borrow money at 5%, then I'm going to get 105% arbitrage. Why wouldn't you?